Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. Hope everybody's having a fantastic start to the week. It's going to be another busy week of earnings, but as usual, Monday starts off kind of slow. So nothing huge this morning before the open. And really, as I'm planning for the week, there's nothing that really stands out after the bell either. VIP shop, the smaller Chinese name, have up here. They haven't technically scheduled yet, tentatively scheduled, but haven't confirmed it. Uh, it's one that I've traded in the past, and it typically moves when they report. But with the company not having confirmed, and no real visibility on that front, probably just leaning towards leaving that one alone. But it is one name that I've had success with in the past. I've traded it over the last year, and I know it's one that moves. So maybe when they do confirm, be something I entertain. So let's skip right to Tuesday morning then. So Under Armour before the bell Tuesday, priced in about 2.5 points. Had a big quarterback in October, right? And then gave it all back in December. So this gap down was off of Investor Day. They had some guidance for this year and longer term. After big move up, big move down, the stock is basically right back smack in like the middle of that range, right? And it's been hanging out in a pretty tight little consolidation above multiple moving averages right here. So they did give some guidance in December, but still, on the chart, I mean, plenty of room lower, plenty of room higher. Not a cheap stock, but also one of the names that's growing. Retailers have been awfully volatile, and a name like Under Armour is typically pretty volatile. So 2.5 points, but visibility for possibly 3 to 4, like a strangle here. Possibly looking for a retest of the high if good, or a retest of the low if negative. So definitely keep an eye out for that one on Tuesday morning. Also, Shopify, pricing in 16 points. Really like the way this is setting up. I mean, it's software stock hanging out right at the top of its range, right? Um, it's pricing a pretty big move compared to what it's done in the past, but a pent up breakout, right? You get like a nice pent up breakout through this level and a short squeeze. So it's one of the names that's a little bit more heavily shorted. Citron has been short this name. There's been some vocal short sellers in this one. So great stock, and great recent performance. Really strong sector performance. Software names, right? Setting up right at the top of resistance, coming off a strong quarter recently. So I'm bullish biased, looking for another strong print, possible breakout, and then a measured move should carry this up into like the 190s. 190s 200 area. So I was thinking just bullish bias trade, call spread, or if you're interested, maybe I could call fly something like that. After the close Tuesday, Akamai. It's priced in at 5 points. Personally, I don't feel it's the best setup technically, but this is typically a pretty volatile mover, right? So it's averaged about 7 points over the last 3 quarters, and in October specifically. So if you want to use some recency bias, it moved greater than 10 points. So last quarter it moved greater than 10. This quarter it's priced in 5. Um, again, it's not the best technical setup. I don't love the chart one way or the other, but options are 5, averaged over 7. Last quarters are greater than 10, so it does seem as though there's some room there, just based on what the options are pricing in. But with not a lot of visibility on the chart, probably leaning more towards like wait and see. Maybe like last minute hop in, but I don't love the name, but it is one that tends to move. So wanted to put that on your radar. TripAdvisor, also Monday after the close. So pricing in 7 points. The stock, if I go back a little ways, you can see. So the stock has finally broken like a really long-term downtrend, right? And it is coming off a solid quarter. So here, coming off a solid quarter, pulled back, but still riding like this 200-day uptrend higher, hanging above all near-term moving averages, which is definitely a positive sign. Expedia had decent numbers on Friday, right? So coming off a good quarter, Expedia had decent numbers, nice little uptrend, bullish biased, but thinking actually maybe like a staggered strangle where you have like 2-to-1 bullish to bearish risk, right? So thinking you want to be maybe more focused on the upside just because of how fundamentals are lining up, but acknowledging that there has been some quarters, right? Like so back in August, and over the last couple of years where the stock has really gotten hit hard. So, if they slip up and the thing loses the trend support, could be a pretty significant move down into the 40s. So, thinking maybe like a staggered strangle, skewing risk maybe a little bit more to the bull side on TripAdvisor. Also, after the close Tuesday, Twilio, this thing has just been a rock star. Right? Pricing in 16 points, give or take. This thing, if it's not the top performer in the market, easily one of the top performers, and just literally off all-time highs by like a point or two, coming off a couple blowout reports. So stock is right at its best price, up a ton over the last year, and expectations, in my opinion, have to be really, really, really high after like the recent reports that it's turned in. So overall, like the stock seems like it wants to go higher. The sector has been great, the performance has been great, the numbers have been great, but with 16 points priced in, I don't know if it has that left in the tank, with expectations so high. So maybe a calendar spread, right? Something to take advantage, maybe more of like the near term premium in favor of like a longer term position, right? So it's saying that maybe it doesn't have a ton of upside on earnings this week, but overall the chart is bullish and it seems like it wants to work its way higher. So some sort of strategy to possibly take advantage of the high near term premium. That's what I'm thinking on Twilio. But overall, the stock has just been incredible. Okay, before the open on Wednesday, there's really only, I guess, one name, Taba. It's priced in at about $1.75. So it's the first big generic manufacturer report, and Perigo, so peer with the generic names, it's just been rocked on a couple bad. So November and then again in December. So I'm thinking that could possibly be a negative read through to Teva. You could see that back in December. Obviously the market was weak, but also some of this was due to Perigo weakness. So Teva's had a pretty big bounce, but if numbers are as unimpressive as Perigo's, still it's about 4 points off its low from December. It's priced in $1.75. Could be some downside here. Maybe start to work back down. It's like the 15 to 14 area. So I'm thinking a bearish bet, but maybe something a little bit more speculative. Okay, after the close on Wednesday, Cisco. So this is probably market cap wise the biggest name of the week. One of the biggest tech names, but market cap also one of the biggest names. Pricing in 2.25, so 225. It's rebounded really well from December. The stock has been resilient. It hung in well for most of the fall, and then really only like in December the selling finally caught up. It's coming off back-to-back pretty strong beat and raise quarters. It's not at its 52-week high, but it's above all near-term moving averages, and it's within striking distance. So it's at above 47. If it's priced in 2.25, that would put it up basically right at its 52-week high, right? So I'm bullish biased on this, and I think if it's another good number, this thing could start to work towards 50, which it hasn't been able to test. So bullish biased. Like 50, as a target, but maybe something longer dated. It's not the fastest mover, and breakouts in the 52-week highs have been a little bit more challenging. So, maybe something longer dated, a couple months out, right? Targeting a move up into like the 50s. That's what I'm thinking on Cisco. Fossil, pressing in 3 points. So this is an extremely volatile retailer, and they haven't given holiday guidance yet. So, I feel like that's all you need to know, right? Fossil has averaged greater than 6 points on the days reported over the last 2 quarters, right? It's heavily shorted, and so it's averaged greater than 6 points. Let's go back. So it's averaged greater than 6 points the last 2 quarters, right? It's heavily shorted, very heavily shorted. It's the holiday quarter, and they haven't given any guidance yet, right? Yet the options are only priced in 3 points. So to me, you have maybe 3 to 4 things indicating a potentially volatile print, and yet the options are priced about half of what it's averaged the last 2 quarters. So it's like ding, ding, ding. Like I'm thinking, strangle, maybe straddle. We don't do straddles too often, but maybe straddle in this case. It's one of those names where it has a history of it's had some really significant moves in the past. Holiday quarter, several things line up for it, so I'm thinking some sort of volatility strategy on Fossil. Also, after the close Wednesday, Yelp, pricing in about 5.75 or so. So absolutely smashed last quarter and really hasn't had much of a bounce. I mean, it has lifted off the low, but it hasn't really come anywhere near testing that gap. There's a couple of M&A headlines on this one recently, and I'm really not sure what to make of it. It's priced in at 5.75. I feel like there could be 5 to 6 other direction. Maybe to get back down into like the 30 area. That'd be almost 8 to retest the low, or to close the gap would be about 5. So maybe like 5-ish higher, maybe 7 to 8 lower. So, the options seem to be kind of in line with what the chart is indicating. So I'm not sure there's a ton of room either way. And if I did do something with it, it would probably have to be some sort of spreads or flies, some way to like get the risk down, lower the debit, because options seem to be priced about what the chart is indicating it could move, in my opinion. So if I did do that, it would have to be like spreads or flies or something along those lines. Also Wednesday after the close, SurveyMonkey. So it's priced in 1.5 points, so about $1.50. Recent IPO, played this one last quarter. I like the action overall, right? Double bottom, just pushing up into like basically the resistance, right? Had a pretty good number last quarter. And there really could be an explosive breakout, right? Just kind of lining it up here. There could be like an explosive breakout if it's another good quarter and it gets going. It's never bounced and come anywhere near retesting the high from the IPO. But back-to-back good quarters. Stock turns the corner. Recent issue. Maybe momentum kicks in. You never know. So I'm thinking speculative bullish bet on SurveyMonkey this coming week. All right, on to Thursday. Before the open, Goose. The Goose is loose. So pricing in 8 points. Columbia, COLM, just had a blowout report on Friday, right? And Goose was up off of that. So, that was pretty good indicator for Goose. Goose itself is coming off a couple of really good quarters, right? Even though back in August it ended red, it was still a decent print. Back in November, strong. So beat and raise. Columbia just had a blowout. So you're thinking bullish on this. But the setup overall isn't as strong. It's basically hanging where it was like back in June, even after multiple blowout prints. High expectations, right, after recent performance, after Columbia's numbers. So I'm thinking it could be kind of a choppy move overall. And with 8 points priced in, you really got to pay up for it. So overall, I'm thinking probably an avoid for me. Just as of right now, I'm thinking probably going to be an avoid. Cyberark. Small cap cybersecurity play. Pricing in 8 points. This is one that we've actually traded this a couple times in the last year, I believe. At least once, I believe twice. So it's a little bit more of the under the radar cyber play, but stock is acting great, right? Coming off like a really nice quarter in August, a really nice quarter in November, just off a 52-week high. Software stocks are acting great. Valuation's actually not too bad on this one. So, thinking bullish, but lower debit. So maybe the spread, fly. I like the upside, but at 8 points, after a couple good quarters, good stock performance, expectations are kind of high. It's like a recurring theme. I'm sure you've heard me say it a bunch of times now. Recurring theme. Expectations are high. Stock performance has been good. So it would have to be something to get the risk down. So a debit, fly, or some sort of spread. Also Thursday morning, Yeti, another recent IPO. It's priced in 2 points. So only one earnings report under its belt, and you could probably pick out which day that was, right? Here. So it moved greater than 5 points that session. And coming up on the holiday quarter, but they did guide at the beginning of January here. That was this day right here. I'm thinking it's still, even though they did guide in January, it still might be a decent speculative bullish bet. Because overall it's been acting pretty strong. It's held nicely onto gains, right? The quarterback in November was good. Decent guidance in January. Maybe if they give solid full year guidance going forward, it could still be a mover. And the stock is kind of flagging up, not right at 52-week high, but above moving averages, just within striking distance of resistance here. So, kind of like the setup, but it might not be a huge mover specifically this quarter. So maybe something longer dated. Maybe something like a month, 2 months out. Maybe something like the 22 area, 2250, I think is what's available. Something like that. A little bit further out of the money. Maybe a little bit more aggressive. But if things kind of fall into place, maybe you get a move back to retest the high from the first earnings day. Okay. After the close Thursday, AMAT. So this is priced in 2.5 points. And at this point, there's already been a ton of chip reports, and most of AMAT's peers have reported. Micron probably the only one that hasn't. So, bumping up into 40 resistance, right? Bumping up into 40 resistance here. It's already had a really big bounce, and, recent numbers just honestly have not been that great. A lot of chip stocks have lifted off the lows, but how many of those reports have really been strong? Not a lot. Seems like more like, stocks that were beaten up had relief rallies when the numbers weren't as bad. So AMAT's already rallied in along with the sector, kind of in anticipation of not that bad numbers. So, I'm thinking maybe it's set up for a pullback. Maybe like the sector just in general set up for a pullback after, a pretty big bounce off less than stellar numbers. So, thinking maybe possibly a bearish bet here. Maybe do some sort of like shorter term, put spread, something looking for like a pullback, maybe into like the mid 30s or so. Just because expectations, the stock has bounced. It's ran with all the other chip names, so maybe it's due for a pullback on some report, especially if guidance is weak. Also Thursday, Cognex. I don't know if you guys are familiar with this one. Pricing in 4 points. So typically a really volatile tech name when it reports, right? So here, this was earnings. Here. So it's averaged greater. It's averaged say about 7 points the last 3 quarters, which I just highlighted here. So it's averaged about 7 points, and this quarter it's pricing in 4. So the options look slightly underpriced to me. It's right at the top of this resistance area, recent resistance, hanging just above a couple of key moving averages. Honestly, I feel like there's visibility for 6 to 8 points in either direction, right? So, back down to retest this kind of support range, right? So it's right at the top here. The last couple times it's failed. It's dropped all the way down to like 40.39. So that would be 7 to 8 points lower. And then if it breaks out here, the next key area is probably not until like the mid 50s. So that's almost 8 to 9 points higher. This has a history of pretty big moves, but yet it's only priced in 4. So that to me, volatility candidate, straddle. So that's what I'm watching. A little bit more under the radar name, but that's one I definitely have circled going into next week, or coming in to this week. Sorry. Also, after the bell, Thursday, CGC. It's a cannabis play. Priced in about 4.5 points. Options, honestly, not too bad. But the thing with this is that I'm just really not sure that earnings are the main catalyst for this stock, or just for the cannabis names in general. Just not sure that earnings are really like the main catalyst at this point. Just because revenues are so insignificant compared to the overall market value of these companies. And honestly, I feel like these cannabis names just don't really respond too great to numbers so far. They kind of pop on other headlines, and then when you actually see the numbers, they kind of like, people are less interested. So um, probably leaning towards not playing it. If anything, maybe a cheap out of the money bearish bet, but I don't love that idea. I don't love the chart. Um, I'm thinking probably going to be an avoid, but it's definitely something that could move on Thursday. Also, NVIDIA. So this would have been probably the big event of the week, but a couple weeks ago they gave guidance, and that took some of the volatility out of it. So, had they not given guidance, the options probably would have been pricing in like a 20-point move. As it stands, because they gave guidance, the options went pricing in about 12 points. Okay. I'm not really sure what to make of it because it on the one hand it got destroyed and the numbers were terrible, right? The guidance was significantly below the street. On the other hand, a lot of these chip stocks have been rallying after reporting bad numbers. So it's like, what do you make of it? Like, is NVIDIA in a different category, or is it a chip stock that's now set up for a bounce because maybe all the bad news is out? I really don't know what to make of it. Even with guidance already out there, 12 points actually doesn't seem that bad. It seems like it may end up being kind of light. So, it's about 12 points to close the gap, right? Just about 12 actually. And its stock is about 18 points just off its low from where it was like a week and a half ago. So, if forward, so they gave quarter guidance, so forward guidance is either good, more positive, or maybe less bad is a better way to describe it. Or if it's really bad, maybe you get back down to 130, maybe retest the low 125, or if it's less bad or even positive, close the gap and then maybe make a push up into like the mid 160s. Maybe. It's a little bit more of a speculative trade now, but at 12 points, there actually might be some room there. So, tentatively thinking maybe strangle. That might change. It'd be nice to see options maybe creep lower. So if NVIDIA tightened up over like the next couple days and options started to come in, that would probably be a little bit better of a setup. So definitely going to be watching that. Not sure what to do with it yet. Also Thursday, Baidu tentatively scheduled but not confirmed. So kind of like VIP Shop, going to have to wait and see when Baidu is actually going to report. Options are indicating it's going to be next week, not this week, but we'll see. We'll just have to wait. All right, last but not least, Friday before the open, Deere. Pricing in 8 points. So there's been some mixed reports in industrials, right? Cat was weak. And Deere probably, maybe gets more of its cues from Cat than some of the other ones. But Deere right at the top of monthly resistance. You can see, right? Right at the top of monthly resistance. So there really could be a pretty sharp breakout or breakdown from here. I mean, 8 points would put it, not quite at its 52-week high, but 8 points higher, 170. Then you get up into like the 175 area, right? On the downside, if it loses this 160 level, the last few times it's rolled over, it's carried it all the way down into like the 130s. So actually, kind of like a pivotal quarter because it's I don't want to say make or break, but it almost is like a make or break because of the technical setup, right? If it's good, then it breaks out. If it's bad, then it breaks down. And in either scenario, there seems like there could be a pretty big move. So price in at 8 points, average closer to 10 the last 3 quarters. I really like the technical setup. Right now, there's a March put spread that's open. So, that's probably going to be okay for the bearish portion, but with potential breakout and significant upside, probably have to pick up something, turn this one more into like a strangled trade. versus a directional. I'm thinking more of a strangle here, looking for a pretty sizable move either direction. So that's one I definitely have circled. With industrials being pretty volatile, and this setup being a little bit stronger than a bunch of the ones I've seen so far. So I kind of like Deere going into Friday for a bigger than expected move. So that'll definitely be one I'm watching. All right, so that's that. Still, as you can see, lots to look forward to. It's going to be a heavy dose of small mid-cap tech names, but there are one-off stocks outside of those that should be in play. So get a healthy dose of all sorts of action this week. I'd love to hear what you guys think about any of those names I talked about. What are your guys' thoughts? What do you guys see on the charts? What are your top plays for this week? So reach out. I'd love to hear from you. Hope you guys have a great day, and I'll talk to you all tomorrow.